I think every business is different, but certainly thinking about succession planning is important.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. It's always a pleasure to have you with us. Well, today I am pleased to welcome aboard John Newton. Now, John is a very familiar face with a lot of our viewers and listeners out there. I've known John for years through his work at the American Farm Bureau Federation, and then he spent, I guess, 4 years on Capitol Hill working with the Senate Ag Committee, and now you're with a company called Terrain. John, thank you so much for joining us. First of all, if you would, let our audience know what is Terrain and what is your job role there?
So I'm the executive head of Terrain, and Terrain is a team of analysts. We have it's an offering of several farm credit banks, American Ag Credit, which you can see on my shirt here, Farm Credit Services of America, Frontier Farm Credit, offer Terrain to their customers, to their lenders. And the goal with the analysts, we've got some of the best analysts in the business. We cover everything from apples to wine. So every single commodity is covered in terms of our market analysis. And these analysts, they work with the lenders, they work with the farmer customers to help them make more informed business decisions. We provide outlooks for each of the commodity markets. And for folks watching, you can read the terrain output at terrainag.com.
All right, well, excellent. And of course, it seems like you're just a perfect fit for that, given your background and everything. You're originally from Kentucky, right?
That's correct. Went to Louisville. I worked in ag. I've been working in ag for close to 2 decades now.
All right. So, in your last position, let me back up a notch.
Mhm.
Before you got to Terrain, you were working with, is it Senator Bozeman in his office, or was it the Senate Ag Committee directly?
So Senator Bozeman was the ranking member of the Ag Committee, but I was the chief economist, the Republican chief economist on the Senate Ag Committee.
Oh, okay. I think a lot of our viewers are probably wondering, John, what happened with the Farm Bill? Everybody was really optimistic a year ago that we would have it done this year.
Hmm.
Nada. And here it is election time and nada. Um, I think some folks are probably not too surprised by that, but where do we stand on that right now?
I can tell you, for I was on the Ag Committee for 4 years as chief economist. The last two, we were traveling around the country listening to farmers. Senator Bozeman has been to 23 or 24 states, listening to farmers, soliciting their input on what they'd like to see this farm bill. In the summer this year, Senator Bozeman released the Farm Bill framework, the Republican Farm Bill framework. So I think where we are is, we've got the outline of what the ag community would like to see in the Farm Bill. They'd like to see enhancements to the risk management tools that they depend on, improvements to ARC, improvements to PLC and crop insurance. I think where we are today is trying to find out how do we pay for the things that farmers and ranchers would like to see in the farm bill. I do have faith that we're going to get a farm bill over the finish line. I think members are back home right now listening to farmers. They're hearing how tough it is in the farm economy, and they'll come back motivated to get a farm bill over the finish line. After the election, I think there's a number of other priorities that they will likely have to attend to as well, in terms of responding to the natural disasters that we've seen, the two hurricanes that came up the East Coast, and as well as the drought conditions out west. So there's a disaster package that needs to get over the finish line, and then obviously folks are looking at the farm bill.
I know I've heard some comments over the years that they have kind of gutted the agricultural programs to the point where now when you might need support programs again, there's no money left to do that anymore. Is that accurate?
Not necessarily. I think what's happened is if you go back to 2018, every single year there's been some sort of black swan event that's hit agriculture, and Congress has responded. They provided financial support during the pandemic. They provided financial support for all the catastrophic natural disasters that we've seen. And so when you look at the inflationary environment that we're coming out of now, farm input costs are record high, commodity prices are falling. And so I think folks want to see an enhancement to the risk management tools. The tools haven't been gutted. They're not reflective of the modern farm economy that we're dealing with today. Like if you look at reference prices, for example, in the Farm Bill, they were established using data over a decade old, and we've seen what input costs have done on the farm, and farmers would like to see these risk management tools updated and modernized to reflect the environment that they're operating in today.
Well, and you have to admit that the farm economy really had a good run there for about 3 or 4 years. And then we got to last year, and it's like the wheels completely came off. Fortunately, some in the ag community were able to kind of put things away for a rainy day fund, if you will. But young farmers really didn't have that opportunity. The ones that are just starting out, that's going to be a bit of a problem, isn't it?
Well, I mean, it's a problem when margins are tightening around the country. I mean, the crop sector in particular, if you look at wheat, corn, cotton, rice, peanuts, uh, they're facing historically high input costs. Yeah, we are seeing some potential relief over the next 12 months on interest rates, but labor continues to be expensive. Storage is expensive. And so you have these high input costs, and then commodity prices have fallen. I think on the corn side, it was the fastest decline in the corn price that we've ever seen in history. So you're exactly right. Some folks, maybe had good marketing and good risk management plans in place, had a little bit of working capital set aside to deal with this downturn. But if we enter a prolonged downturn in the farm economy, with margins as tight as they are, it is a big concern.
I remember when I personally started out farming, I bought all my equipment in 1979 and 1980.
Hmm.
So if you're a student of history, you know that was not a good time to do that. And I was immediately upside down about 2 to 1 a year after that. 18% interest isn't a lot of fun. Do you really think that we have any thought of maybe revisiting times like that again? Or do you think safeguards are in place now?
I think the risk management tools that we have today, and especially if we make enhancements in the farm bill to make sure that these programs work better, help us in that type of environment. But the Title One programs, your ARC and your PLC programs, your dairy margin coverage programs, are really built for a prolonged downturn in the farm economy. They provide that level of support when prices are low. But we need to get those tools. They're not reflective of where things are today. I think you see that in the Chairman Thompson's farm bill and in the Republican framework, where they've made some enhancements to the safety net. Even the Democrat proposed framework does make some changes to the ARC and PLC programs as well.
So, what kind of tools do you think are available to farmers this fall and winter as they prepare for what looks to be maybe a really challenging year? Here we have great yields this year, putting pressure on prices.
Hmm.
Brazil is getting rain now, getting their soybean crop off to a good start. It looks like it's going to be an uphill battle next year, but is there anything the farm credit system is able to do to maybe help ease the next growing season here on the part of producer?
Well, I think if you look at the farm credit banks, a lot of them offer crop insurance. There have been some modifications to crop insurance that I think farmers will look at. Beginning this fall and going into the spring, there's a margin protection product that's available. There's the enhanced coverage option, which saw higher cost share put into place this past year by the Federal Crop Insurance Board of Directors. So they've made some tweaks to the crop insurance tools to make them more effective. But again, I think all eyes are on the farm bill too. If we get a farm bill done in the lame duck, there could be other potential enhancements to crop insurance and Title One programs that can help producers. We talked earlier about a potential disaster package that could provide financial support to producers that have experienced, hurricanes or droughts, things of that nature. So there are things on the horizon that could potentially help growers going into next spring.
I'm sure you probably, in your past position there, probably heard a lot of feedback about overregulation out there, out in farm country. And also, there are struggles for things like, like pipeline systems, whether it's
Mhm.
for oil pipelines transfer or CO2 pipelines, what have you. And it just seems like there's always obstacles there. Do you see any improvement in that process moving forward?
That's probably a more challenging question to answer. I mean, I think you can certainly put a cost on regulation. Any increased regulation is going to have a cost either at the farm gate or somewhere along the supply chain that that consumers are going to feel or farmers are going to feel. So, I think maybe all eyes are on the election. That may provide some insight into which way the regulatory environment may go, potentially fewer regulations or maybe more. And I think that's something for farmers and ranchers to pay attention to because obviously regulations impact their business.
So, what kind of projections are you looking at for next year when it comes to the farm economy and just the overall market picture for next year, especially with the backdrop of the geopolitical arena the way it is right now? Lots of tension out there.
Yeah, and I think there's just a lot of uncertainty too, right? We know we've got record yields on the corn and bean side, so now all eyes are on, what's the South American crop ultimately look like? What's demand ultimately look like? What are exports ultimately look like? What kind of guidance do we get on sustainable aviation fuel and 45Z tax credits? So there's just so much uncertainty in the air. But what I do know is that the farmers are innovators and they will evaluate the market conditions. And, if we go into planting, you always see the competitive bidding for acres if we need more or less corn or soybean acres. I think on the cattle side, folks are looking to see when's that cattle cycle potentially going to turn around. Our analysts think it's not turning around anytime soon. So the expectation there would be for favorable cattle prices to continue. I think on the dairy side, milk prices have been good, supplies contracting, and feed costs are going down. So there's so many moving parts to watch in the farm economy. But what I do know is farmers are incredibly resilient, and if we get these tools over the finish line that we've talked about, the farm bills, the disaster aid, it's only going to help farmers be more resilient.
Yeah, the livestock sector has been one bright spot here in the ag economy over the last year or two, and yeah, like you say, it's going to be hard to rebuild that cattle herd anytime soon. I mean, it's going to probably take at least a couple of years yet.
Hmm.
What if things really pop off in the Middle East, or, for example, Ukraine and Russia? Now there is a coup in Russia and all this. Koreas are heating up, and Taiwan and China are heating up. If you get worldwide turmoil like that that really starts bubbling up, is that good or bad for agriculture? How do you look at it?
It's bad in general. It can't be good for, you can look at it bad or good for agriculture in terms of market prices. I mean, I think you look at Russia and, what they're trying to do in the wheat space on the sales price of wheat, and that'll have implications for wheat producers here at home, and it'll have implications on global trade. But there's so many. I mean, we talk about all the uncertainties that farmers can control. There's so many uncertainties that farmers can't control, and geopolitical risk is one of those.
So now you work in the ag lending realm with farm credit. Um, can you tell have farmers kind of pulled in their horns on spending here this?
Well, I think you've seen it just in the equipment market alone. I think you've seen some cooling off there. We've seen some cooling off on some of the land values around the country. I think farmers recognize that we're going into, or we're in. We're not going in. We've been in a low price environment on the crop side, and people started to make business decisions accordingly, thinking about ways that they can potentially lower costs, be more efficient, to weather the economic uncertainty that they're facing today.
I wonder if there's any thought among, especially the older generations, that maybe they're thinking about liquidating their farm ground, putting it on the market, and the way the economy is and how tenuous things are. I wonder if they're thinking more about doing it before prices go down. Is that a possibility?
I think every business is different, but certainly thinking about succession planning is important. I know that American Ag Credit and some of our farm credit partners offer succession planning for farmers to think about. How do I transition to the younger generation? If there's no one that's coming back to the farm, what do we do with the farm operation? So you can work with your farm credit lender to receive those type of services. But the other thing to watch, going into 2025, tax policy. The Tax Cut and Jobs Act is many of those provisions expire at the beginning of the year. So thinking about estate planning, transition planning, and the tax implications are all very, very important for agriculture.
Well, now that's a great point that you bring up that you can help assist in succession planning on the farm out there. I think that's very valuable information and a valuable service that
Hmm.
anybody can take advantage of. Um, Tell you what, how would our visitors and our listeners out there find out more information, like at your new position now? I know you represent, or your terrain group is with several ag credit services out there, I
Hmm.
think, as a
Hmm.
combined effort. But does Terrain have their own website that will kind of take people to where they can get help?
I think if you come to terrainag.com, you can see all the work that our great analysts are doing. Again, they do work on everything from apples to wine. So you can get that type of insight. But then working with your local farm credit lender will help you get those type of services that you need. My email's on the website, so jnewton@agloan.com. I'll give it out to everybody. If you need help finding somebody in the farm credit system, I can certainly facilitate it for you.
Well, John, that's awesome. Thanks again for joining us, and congratulations on your new position there. I know you'll be a great fit, and look forward to working with you more in the future. John Newton with us from Terrain. That's his new position after working at the Senate Ag Committee recently in recent years. That'll do it for this episode. Thanks again for joining us. For Brianne Hendrickson, our producer, I want to thank you again, and we'll catch you next time right here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.